What's going on, everyone? My name is Nicholas Merton here at DataDash, and today is March 18th of 2019. Well, folks, I hope you are having a great day wherever you are, and today we've got a vast range of topics to discuss for the update. We're not only going to be discussing Bitcoin's recent price action and how I think it could lead up towards a really big move over the coming days due to two major indicators, but along with that as well, we're going to be talking about a wide range of headlines from what I've been working on behind the scenes and better explaining that to Bitcoin scaling, Tether's supposed reserves, and the coming shutdown of Bitcoin futures. So we've got lots to discuss, but real quick, I want to share two things with you. This isn't a sponsor of the channel, but this is a really cool project called Altcoin Fantasy that I'll talk about later on that is doing basically, fantasy football for crypto, where you get to pick your favorite altcoins and build out a portfolio with over $500 worth of prizes. So I'll be talking about that towards the end of the video if you're interested, so stick around. But real quickly, a video from our sponsor. Our sponsor for this episode is DX Exchange. DX Exchange is the first regulated digital asset exchange that allows institutions and individuals to invest, purchase, trade, and exchange both cryptocurrencies and fiat for digital ETFs and digital stocks like Google, Apple, Facebook, and Amazon tokens. When you become a token holder, you own digital stocks or portions of the company's stock, backed one-to-one to the real asset. So if you buy one digital stock of Amazon, one stock of Amazon is kept in custody and purchased in the market. Together, we can now trade the untradeable and bank the unbankable 24/7 and commission-free. Alrighty, guys, so taking a look over the past 7 days and 24 hours, things have been actually relatively positive. You can see across the board that most cryptocurrencies are up. This is, again, following Bitcoin as it's been trailing up to test that key level of resistance at 4,000. And on the 24 hours, again, Engine Coin continuing to climb, I would assume off of the speculation tied towards the Samsung partnership, as well as a few other players like Wax, Decentraland, and even KuCoin shares and Bitcoin Cash. So going across the board here, markets again are slowly but surely tailoring up. You can see this over the past 30 days where we've gone up nearly close to $20 billion. Again, climbing up ever since we've really tested that bottom at around 100 billion. And I really think that even though we might still have a double bottom in this market where things might pull back as we go through this kind of sideways bottoming process, I'm getting really confident, guys, that I think 100 billion is going to be the base for this market. Not to mention, take a look at Bitcoin dominance here. Starting again to deplete down towards that 50% mark, getting very, very close to having a breach on 50%. And if you see that, which has served as support multiple times here for Bitcoin dominance, I think as other coins are starting to pick up here, you can get confident that some of that market dominance is going to go to that side. And that means Bitcoin could possibly move up, and at the same time, altcoins are going to be moving up at a faster pace. So you want to look at a lot of the Satoshi pairings and check out some of your favorite altcoins in that matter. Now, speaking of Bitcoin potentially having a breakout, this is something, again, that goes both ways. So we could have a break up and a break downward, and I know that's like a common running joke. It could go up or it could go down, but this is actually a realistic trading strategy you can use, guys. Sometimes you're entering into what I call the twilight zone. If you've watched me talk about trading on my channel, it's something I've used in equity markets, FX markets, or more Forex more specifically, I always abbreviate that, but also in crypto markets as well. And it has to usually do with a squeezing between something like moving averages or Bollinger Bands, things of that sort, or wedges, things that coil in price. And that's exactly what we're seeing with Bitcoin right now, with some of the simplest indicators, but also one that I talked about a few videos ago back when I was in Thailand, that a lot of people don't really use, and that's the McKinley dynamic. Now, the McKinley dynamic, as well as the 50, 100, and 200-day moving averages hold a lot of significance, especially when you can spot how they're coiling in price action. The 100-day has played key resistance. The 50-day, for example, if you can see it here, I'll even try to focus in here on the green line. You can see how it was holding down price multiple times, and when we broke out above it, we started to make it support. So this gives a case for the bulls. And you can see here as well, we're doing the exact same thing, trying to get past the 100-day moving average. It's not complicated, not fancy, no crazy indicators. It's just showing you basically support and resistance, right? And it's a matter of whether or not the market can get a close above that 100-day. So these are the really two things I'm watching here. The set between the 50-day as well as the McKinley dynamic holding as support, and the 100-day coming in and weighing down as resistance. As these coil in, as price has been holding up higher, these moving averages are going to move higher, and the 100-day is also slowly but surely moving downward or sideways. So you get a coil on the price. So what's going to happen? Is it going to break up or break down? I can't predict that, guys. Volume is so low in this market. I have no doubt that any big price moves could be caused by little to no buying or selling volume, right? So I don't want to tell you guys what's going to happen, but I will tell you that it's a matter of waiting to see what close we see above or below these moving averages. So if I see a close above the 100-day moving average, specifically one that closes on the daily above 4,200, something around that ballpark, I'm going to start getting a little bit confident, because I think at that point you're ready to go up and test towards the 200-day moving average. It's not that far, but it's a good few $100s for Bitcoin in that case, and that could start to spark some of the risk taking in altcoins. Now, if we start to get knocked down and break below the 50-day and the McKinley dynamic and get a close below there, as we've seen, it can act as good support. If it breaks below there, I think that's going to be a significant sign that we're going to come back and test down towards the $3,300 range. Previous support here, not to mention as well, it's going on the previous line of resistance, which would become support. And I've talked about the potential for this to continuously grind down and then do the double bottom we talked about. So again, just what I can pick up from things, guys. You're going to have to make your own assessments. I am no vast TA expert. There's a lot of other great traders out there, but I have traded these markets before, and I've used very simple indicators to do it. And most of the time, I can usually, especially in the short term like this, usually make a decent prediction as to where things are going, or at least have a distinct probable understanding as to what two different scenarios could come about, and having trading strategies for those, right? So again, that's just basically what I'm focusing on there. Now, let's go ahead and talk about what I'm really eager to share with you guys, and that is Project Genesis. Now, I want to clarify a few things, because I think some people see this right away and they build a lot of assumptions. And obviously, guys, I think everyone's just kind of tired of seeing new projects in the crypto space, and I understand that. But I want to make it very clear that this is not an ICO. This is not a cryptocurrency. This is just simply an open source, which means anyone can contribute, just like most crypto projects, an open source initiative to build upon concepts for money for the 21st century, to improve upon the foundation of what we have in blockchain. So if you guys haven't seen this video, it's a little bit of a 2-minute kind of marketing promotional video for Project Genesis to get people excited looking into it. I really recommend you check it out. I think it was a pretty decent video. But if you guys want to really get to the substance and learn about what Project Genesis is, what I've been working on behind the scenes, and how I've been refining these concepts, check out the white paper. Just simply click here. It'll bring you up to the white paper. It's only really about 6 pages, and then you have a references page. So it's very similar to Bitcoin in the sense that it's a small white paper. It's not, a bunch of technical mumbo jumbo. It really talks about the 3 different concepts of ledger analysis and peer-to-peer pools, and also cooperative addresses and ecosystems, which really excite me personally. But I recommend you guys just give it a chance if you guys have the time. It's not that hard to digest. I try to keep it very simple, and I almost kind of tell it like a story, because it's a conceptual white paper about these different ideas. And if you guys are interested, if you like it, there's 2 things I want to ask you guys to do. If you guys can, if you're a developer, go contribute over on the GitHub. If you want to follow us on Twitter, join our Discord, join our Reddit, definitely do that. We're starting to kind of build out again an open source ecosystem. It's all of us coming together and building around these concepts. And then also, feel free to click on the events tab, and if you guys have a city that you live in that's listed on there, definitely go ahead and sign up for tickets. And not to mention as well, if there's not a city on there that you like, or that you live in personally, you might like the cities, but if you live in a city that's not mentioned, leave it down in the comments down below. And if you see that city that someone's commented that you live in, like it as well. So I'll try to keep open to visiting as many cities as I can and seeing as many of you guys as I possibly can, okay? So again, great little set of tools to learn about it. It's what I'm working on behind the scenes, guys, and hopefully it'll turn into something good that can improve the space even further. So, alrighty, so let's go ahead and talk about these headlines here. So this is a headline from an individual who works over at Block One, which is one of the largest block producers and kind of central groups in the EOS ecosystem, stating that Bitcoin won't scale because it doesn't need to. All right, so this is the CEO of Block One, Brendan Blummer. I bet he's a nice guy and everything. I don't want to talk negative about him, but I do disagree pretty strongly about this, and I'll kind of get to that point here. So this is based around pretty much a tweet chain here, and really all we need is kind of the substance of it here. So Brendan was making an original tweet that said, over the next few decades, Bitcoin will replace gold as the leading commodity to store value. And that is something I 100% agree with. I think, as I've talked about before, the fact that you are the sole manager of your private keys, I've used that gold analogy where basically, someone can put a gun to your head and say, give me your gold, and you say no, and then they shoot you and then they take your gold. If you can stand your ground and say, no, I will not give you my private key, no one can get access to your crypto, right? It's a really revolutionary thing. It's a next step in the store of value. Not to mention, I can wire it across the world. I can do whatever I want with it. I can spend it, save it. You know, it's literally the best ideological way to store value in that case, which is something that I think still a lot of people don't get, and why it's seen as digital gold for the future. But I do want to talk about what continues in this tweet chain here. And again, all the respect to Brendan. I don't know him personally, but he's a nice guy. But this guy named Justin here had stated, what happens when 21 million have been mined long after we're gone? So when we reached the end of the block rewards, he said, big fees for settlement layer transactions. And as we go through, we can see a guy named Ash here said, still cheaper than valuing and storing or transferring gold. Can't replace liquidity, and Bitcoin definitely has a huge advantage. Will be interesting to see if the small block or high fee strategy works for Bitcoin. This was something that came up a few weeks ago. And Brendan commented, Bitcoin won't scale because it doesn't need to. All right, so I've got to talk about something here, and this is something that I understand where Brendan's coming from when he was answering back to Justin here about you're going to have bigger fees when the block reward is done, right? There's going to have to be some type of solution here. But this is something, especially more referring to the fact of kind of like smaller blocks and high fees, if this strategy is going to work for Bitcoin. Let me make it very, very clear, at least in my analysis, guys. I don't know if I sound crazy, but higher fees are not going to improve Bitcoin adoption, all right? They may have during, some people correlate during the bull market, people are paying high fees. Yes, people in Western markets, a fraction of the world population who have the luxury to pay those kind of fees were doing that because they were speculating on crypto. Everyday people cannot do that. So I'll provide a little bit of an analogy here. The reason why Bitcoin needs to scale to some degree, and I would prefer it, in some sense be on chain, or at least provide a decent amount of scalability on chain. The reason for that is because if I'm a multi-millionaire, billionaire, and I'm wiring, or sending across the world $100 million worth of Bitcoin, I don't care if I'm paying 5 cents in fees, $1 in fees, $5, $10, $50, $100. I don't care. Because to me, that's fractional. That's a fraction of a percentage in wiring that money. It beats out Swift, any system in the world, and it's convenient. In a few minutes, I can do it on my own. It's awesome. It's peer-to-peer, right? And no government can stop me in that case. It's cool. But for someone who is sending, much like they would through Western Union or any other wire transfer system, $50, $100, $200, their weekly income or their monthly income that they can send as a part of their savings, they can't pay $10, $50 fees, okay? They can, but that doesn't improve upon the system that we originally were trying to fight against, that we were trying to improve against. And this is some problem that I see with a lot of people in the Bitcoin community now, is that we've seemed to lose a little bit of touch as to who really is going to need this technology, and why they need lower fees, and why they need a system where they can operate. Some people can say, they'll use Lightning Network and all these things. I support all the development of Lightning Network. I'm really excited by the progress that it's made this year. But there needs to be an opportunity for people, if they really need that censorship resistance, if they need that finality right away on chain, and they need it for cheap, people in developing countries should have that opportunity to do it on the Bitcoin blockchain. It's nonsensical, right, to not do that. And not to mention to make an argument for lower blocks. I don't know where this has come from. This has really come up over the past, I think, month or two. But again, I would just say to Brendan, all respect to these guys, this is just honestly kind of backwards thinking, right? To lower blocks and to think that Bitcoin doesn't need to scale, right? Maybe for the 1% of people who have touched it now, but to the 99% of people who can't afford $10, $50 fees, it's not the case. So we've got to keep researching. We've got to keep developing. Lightning's great. I think if we are going to have a block size increase, probably better to do it now in the early days rather than later. It's kind of like, making the big changes in software early on rather than later, and making those big decisions earlier on. I think it'd be much easier. But again, I know some people are very anti big blocks in that case because it's going to centralize the network. And possibly, I think when it comes to miners can afford a few extra terabytes of storage. Alrighty. So anyways, I'd love to hear what you guys think about that in the comments down below. Get a discussion going. But for Tether, and this has been something that some of us have known for quite some time, but I felt it'd be good to talk about. Tether finally reveals on their website that its reserves aren't what they say or what they claimed. Originally, Tether had claimed that it was a 1-to-1 ratio with dollars, right? So you had basically one Tether, you had $1. That's not the case. The $2 billion token supply stated that it, quote, it has every Tether 100% backed by its reserves, which include traditional currency and cash equivalents, and from time to time may include other assets and receivables from loans made by Tether to third parties, which may include affiliated entities, collectively reserves. So this opens up the door for it being a lot of other things than cash. Now, let me make a few points here. This is still actually better. I will give this to Tether. This is better than common day banking. Like, most of the credit that people get out doesn't actually have dollars behind it. This is obviously what's known as fractional reserve banking that a lot of people talk about. Probably, if you're probably in crypto, you might have heard about it. But this is actually an improvement on that, because you do have some reserves at least backing it up, almost like collateral, similar to a lot of the lending platforms out there, how people will lock up ETH and use that as collateral to generate fiat loans. But the one thing is, as well, that is just kind of sensical here is that it could be that Tether doesn't have anything backing it, or maybe fractionally, has only 1/10 of the amount of Tether out there in certain assets or cash behind the books. So if they have 2 billion, coins in this case of Tether, they may have, $200 million worth of assets or cash equivalent. And it would still operate, in my opinion. I have no doubt it would. We could hear that tomorrow, and it would still operate as normal. And it's because it's the same exact system as to how cash works in traditional systems. And I think the market as well, with the algorithms that trade Tether markets, if the Tether pairing broke away, there's an arbitrage opportunity. There's an opportunity to make money there, and bots would keep it at that rate. And this is what we see with a lot of the major currencies in that case that are stable coins, right? There's an opportunity to play off those fractional, trades and opportunities to bring it back to the same dollar rate. So you have slight fluctuations, but algorithms tend to normalize it out. So I'd love to know what you guys think about this. More than anything, it doesn't shock me at all. This has been kind of well known. I think Bitfinex had talked about it a long time ago. But yeah, I don't know. I just think it would be interesting to see how long Tether will last and see if some of the other stablecoins start to outweigh it, and especially some of the ones as well that aren't actually pegged by real currency, like MakerDAI and a lot of the other ones. All right, so finally, let's go ahead and talk about what's going on with Bitcoin futures contracts. Now, they're not shutting down entirely. As we all know, back in December, there were really two major companies that actually went about listing Bitcoin futures. This was the CBOE and the CME. Now, these are two of the largest futures exchanges in the world, and that got a lot of people excited. However, one of those giants has stepped out, the CBOE, but in this case, we still have the CME saying that there's no change or no differing mindset as to how they're going to operate business. They're going to continue to trade Bitcoin futures. Now, a lot of people might be wondering, why is it that the CME is staying in and the CBOE is pulling back? Well, it has a lot to do with business and also, the risk of having financial products in this case. So, it's a similar case scenario, I think, to how, for example, Binance or any other major exchange or Coinbase, when they list a new token or cryptocurrency, there's always legal ramifications with it, worries about being able to maintain those markets in a fair operating way, as well as knowing what you're listing and whether or not it's a security or if it's things that, might require further regulation or might lead to penalties that have costs. All those kind of things need to be factored in. And sometimes operational costs, right, just simply alone can be too expensive. Well, in this case with the CME pulling out, the CBOE, my apologies, they're very similar names. The CBOE probably pulled back Bitcoin futures. There's a variety of reasons, but I would say the biggest one is probably that the cost outweighed the benefits, right? The volumes for these financial products, which will determine really how much money they're making off of them, went down pretty dramatically over the past few months as Bitcoin had the decline from 6,000 to 3,000. And that led the business to deciding that by June, they're going to be shutting them off. Now, I think in this case, it's a matter of one folding further than the other, or before the other in this case. So what I mean by that is now that the CBOE has pulled back, it realized that at the moment it just can't operate Bitcoin futures. The CME is going to stick around because they realize, hey, we can tack in some of that other volume from the CBOE. We've already got some volume on our financial products. We're at a state where we can continue to monetize this financial product, right? So that's why the CME is staying around. This is very similar to like, commodity cycles, where basically if oil starts to get too cheap and it's too hard to produce or make a profit on, oil producers who just can't stand it have to shut down. And then other oil producers sometimes can manage to stick around and continue doing what they're doing, or they go about expanding, right? In anticipation for prices to go up because supply is cutting down. So it's the same exact scenario here, interestingly enough, all the way in financial markets. But this is what's going on between these two companies. And I have no doubt the CME is going to continue to trade these Bitcoin futures for some time, unless there's really something cataclysmic in cryptocurrency markets. But I think we're going through the bottoming phase, and I think they're going to try to hold through so that when that next bull cycle comes, they're going to be the first ones to be able to really trade futures, or at least they're going to be the only ones in the market who can trade them. And who knows, the CBOE could always come back, right? We saw how quickly they came into the market with the futures. They could probably come back later, but they'll have the few months advantage there. One thing they mentioned as well is the expense of connecting to both of these exchanges here. If you're already trading one of the products on the exchange, then there's no new cost, right? So if you're trading on the CME or the CBOE, maybe trading oil futures or copper futures, wheat futures, there is no new cost. If you're not, you must pay for connectivity, software licenses, market data, all kinds of things. It's very similar to those crazy prices that you find on like Bloomberg terminals and a lot of other financial services, because you buy all those in anticipation of trading billions of dollars or more and potentially making a bunch more money on top of it. So, love to know what you guys think down below in the comments on that topic. But before we wrap up on the video today, I want to let you guys know about the Altcoin Fantasy company. Again, as I mentioned, this is basically, fantasy football for crypto, where you build out a portfolio. I've got a list here of the different prizes that there are for the competition. You've got first, second, and third place. First one being $250 worth of Bitcoin or Ethereum, $100 worth of Bitcoin and Ethereum for second place, and $75 worth of Bitcoin and Ethereum as well. But as we mentioned, there's about $500 worth of prizes that you guys are welcome to get from the competition. And again, it's about building out a portfolio, trying to win against other competitors, and it's something that's completely free. So what you start out with is a certain amount of fiat or cash. In this case, it's virtual, just like most trading simulators, and you go about throughout a short period of time trying to compete with other people and seeing just how much you can increase your portfolio. So it's a great way to practice trading. This stuff is awesome if you're looking to get into trading and you want to see whether or not you can do good, right? Now, there is a little bit of difference between, say, paper trading like this and doing real trading. But again, it's a great place to get your feet wet, to test around some of your technical analysis, and also to, see if you can time the market well with some of the different altcoins out there. And if you want to learn about how to actually do some trading and learn about crypto, they have some material on their website that you guys should go check out in their academy, so you guys can learn from them as well. But again, it's all free. It's a really cool thing. I like any kind of free educational stuff like this in the crypto space, and it's something fun as well that we all can participate in. So anyways, that's it for the video, everyone. Thank you all so much for watching. I hope you all are having a fantastic day wherever you are. Thank you as always for tuning in, and I will see you all in the next video. Stay tuned.